What's up, everybody? Welcome back to my channel. This is a huge update and you don't want to miss this because silver run has only begun.
Gold and silver are rising rapidly, and what we are witnessing right now is not random, temporary, or speculative. This is not a short-term rally, and it is not being driven by emotion alone. What is happening is a deep, structural shift in the global financial system that has been building quietly for years. For thousands of years across every civilization, gold and silver have served one primary purpose: preserving purchasing power when currencies fail. Kings, empires, governments, and financial systems have come and gone, but gold and silver have remained. Not because they are magical, but because they are scarce, tangible, and cannot be created at will. Every fiat currency in history has followed the same path. It begins with stability, followed by expansion, then debt, then excessive money creation, and finally devaluation. The only difference between past currency failures and today is the speed and scale at which this process is unfolding. Over the last several years, governments and central banks have created more currency than at any other time in human history. Trillions of dollars have been generated digitally, instantly, without corresponding increases in productivity, goods, or services. This expansion of the money supply dilutes purchasing power. This is not theory, this is arithmetic. When more money chases the same amount of goods, prices rise, savings lose value, wages lag behind, and confidence begins to erode. Gold and silver respond to this loss of confidence. They are not reacting to headlines, they are reflecting reality. What makes this cycle different from previous ones is the position the world now finds itself in. Global debt levels are no longer manageable. Governments cannot raise interest rates meaningfully without collapsing housing markets, bond markets, and entire economies. At the same time, they cannot lower rates or print more money without accelerating inflation and currency debasement. This creates a trap with no painless exit. Trust in institutions is declining. Faith in pensions, banks, governments, and financial markets is weakening. And when trust erodes, people seek stability elsewhere. This is why central banks, the very institutions responsible for issuing currency, are now some of the largest buyers of gold in the world. They are quietly converting paper promises into physical assets. This is not panic, it is preparation. Silver deserves special attention during this period. Silver is not only money, it is a critical industrial metal that modern society depends on. It is essential for solar panels, electric vehicles, electronics, medical equipment, water purification, and military technology. Unlike gold, much of the silver used today is consumed and permanently removed from circulation. At the same time, silver mining production is struggling to keep up. New discoveries are rare, mining costs are rising, above-ground inventories are shrinking. This creates a widening gap between supply and demand, one that has not yet been fully reflected in price. Historically, during periods of monetary instability, silver tends to outperform gold. Because silver's market is much smaller, capital flows into it have a greater impact. When confidence breaks, silver often moves faster and further. Even after recent gains, silver remains historically undervalued relative to gold. This imbalance has resolved itself many times in the past, and when it does, it tends to happen violently. Gold, meanwhile, continues to function as a global monetary anchor. Despite its rise, gold remains a relatively small market compared to stocks, bonds, derivatives, and real estate. It would take only a modest reallocation of capital to push gold dramatically higher. This is why many believe the move we are seeing now is still early. This is not about gold or silver replacing the dollar overnight. Monetary systems do not collapse instantly, they erode slowly through inflation, debt expansion, and declining purchasing power. Gold and silver do not cause these problems. They measure them. Throughout history, every major currency has eventually failed. The Roman denarius was debased until it collapsed. The British pound lost its global dominance. Countless other currencies followed the same path. Gold and silver survived every transition. Today, smart money is moving quietly. Institutions, family offices, and high net worth individuals are not chasing speculative returns. They are reducing exposure to assets dependent on perpetual confidence and increasing exposure to assets that exist outside the system. Because when confidence breaks, liquidity disappears, access becomes restricted, rules change. And those who prepared early are the ones who remain calm while others scramble. Gold and silver are not about getting rich quickly. They are about staying wealthy over time. They are about protecting purchasing power, preserving savings, and maintaining financial flexibility in an increasingly uncertain world. This move is not over. In many ways, it is just beginning. The conditions are in place. The incentives are clear. The historical pattern is unmistakable. The question is not whether gold and silver continue higher. The real question is whether you recognize what is happening early enough to position yourself thoughtfully, deliberately, and calmly before the next major shift becomes obvious to everyone else.